Hey everyone, welcome back to your last weekly market outlook for the month of August. This is for the 25th to 29th of August 2025. Let's get started with the data that we have last week. A couple of interest rate cuts, obviously they're from New Zealand. We got a 25 basis points cut, not moving the market a lot. And then, obviously the main market mover is the Jackson Hole Symposium. And we got that shift from the Fed in terms of future frameworks, and I think they're basically saying, yeah, we make a couple of mistakes, we were behind the curve, and it was a couple of misreadings in terms of the labor market, and that's basically why they're changing how they're going to be looking at things in the next 5 to 6 years, that they're going to be moving away from focusing a lot more on the labor markets. Definitely want to focus a lot more on the inflation side of things. And yes, they're going to be cutting interest rates starting from September. And that's basically what the reaction that we had from the market last week, that, yeah, it's time for the FOMC to start cutting interest rates. But is that something that they're going to be doing aggressively? I think that's a completely different story here, because what we're looking at in the market is obviously we don't see that follow through this Monday morning during the Asian session, that we actually don't see a continued weakness on the US dollar strength itself, right? This week on Monday, the UK market is going to be closed for bank holidays. In terms of key data this week, we are going to be focusing a lot more on the preliminary GDP numbers. That's for the quarterly numbers in the US. That's for the second quarter there. Again, we're looking at that bump up higher from 3% to 3% for this preliminary reading. And that's pretty much it in terms of the fundamentals, aside from the PCE numbers that we get on the very last day of the month here, which happens to be on Friday as well. All right, let's take a look at the currency movement here. The Aussie USD, we saw that bump up higher there on Friday. Again, we didn't see that follow through on Monday, and that's basically just resets last week's price movement. In terms of price movements here, we're not looking at anything significant. In terms of changes here, the RSI and the stochastics are pretty much neutral. Price is still within the Ichimoku cloud. It hasn't broken out of that 64-65 range on the Aussie USD. Again, the concern that we have here is that Monday we're not looking at any follow through in terms of the positive risk sentiments that we saw last Friday. So again, that's something to be of concern. Now, if we move on to the Euro USD, did we break above that resistance trend line? We sure did break above that resistance trend line, but it's not in a move that is actually strong enough that takes price above 1.18. Meaning that for this week, especially on Monday's open, we didn't see that follow through. We didn't see price continue to push higher. In fact, it actually was a little bit weaker than Friday's open. So this brings the resistance that we have here from July as our main focus for this week. That's going to be at 1.1750 to 1.18. Price needs to clear off this level. Otherwise, it's actually very easy for this one to fail and then come back in to test 1.15 level. That's basically where the support is currently located, and also where the main bulk of that Ichimoku cloud is going to be as well for this week. So any failures in the next 48 hours for the euro to break above that 1.18, it could actually send price lower, closer towards 1.16, 1.15. Now, if we take a look at the sterling, same thing that we're noticing here. Price did push up higher on Friday, but it wasn't strong enough to break or create a higher high. In fact, it actually failed pretty much inside that Ichimoku cloud here, and price is, pretty much in a little bit of a doji here. So what we're looking at here is that price could still fail, considering that we still have this major resistance coming in at 1.36. Any failures in the next 48 hours to overcome 1.36 could actually send the sterling back down to 1.34, and this is basically the lower range that we are looking for on the sterling here. Again, a lot of positive vibes on Friday, but we didn't see any follow through on Monday here, so that's definitely something of a concern. Now, if we look at the dollar Japanese yen, similar situation here. We're not even actually able to break below that order block here. Price is still holding above that resistance trend line, that support trend line that we have here. Price didn't even actually manage to close inside that Ichimoku cloud, and on Monday it's basically just bouncing up. So we're looking at dollar strength here, pretty much still being very consistent. If we focus on the oscillators, the RSI is actually pretty flat. It's not indicating of any trend changes. The stochastic is also not indicating of any weakness on the US dollar itself. So what we saw on Friday pretty much just resets price for last week. It didn't actually add anything new into the market dynamics. It didn't change any of the structures here. So our view for this week is that we need to be a little bit more careful. Don't perceive that US dollar weakness on Friday to be something that would actually be the path for the US dollar going forward. The concern here is definitely still with tariff being fully in place, including the de minimis rules. That's going to be ending on the 29th of August, which is going to be on this Friday. It still is a lot of things that are unknown and could be very unpredictable. And the logic here is that if tariffs are going to be in place, things are going to cost a lot more in the US. That would push inflation up. So I think that would still be the concern and basically the view in the market here. So I need you guys to be a little bit more cautious onto the perception that the US dollar is weaker because of what the FOMC is willing to do in terms of cutting interest rates and admitting that they're behind the curve because the labor market is getting very constrictive at this point in time. Okay. So that's pretty much it for this week. So good luck with your trades. Just again, with that warning there, don't perceive that the US dollar is weak just because of that Jackson Hole symposium over the weekend there in the US. All right, so good luck with your trades, and I'll see you soon.